Good day, everyone, and welcome. Before we start, we have a disclosure. Please be aware of risk in the future trading. All our videos are for educational purpose only. You're very welcome to follow any of our trade automated signal. As long as you are on a sim, we're not responsible for your trade. We strongly recommend to get educated as much as possible before you start using a live money. Okay, we have the Nasdaq at just closed position on the auto trade, and it made 2000. And today the market is a little bit mixed on the 1 minute, and we're gonna go in details on every single one of them today, and we will cover where we are in the market, and then we will start to bring down some of our automated trade and trying to evaluate the direction of the auto trades. So if you bear with me just a few seconds, and we will start. The Nasdaq is already, we started around 9:30, and it catch a beautiful trend. It was a little bit choppy before the market opened, and then the first trade was around 9:49. We started around 9:30, and actually this one here also, it is belong to today. So we had a small losing trade, and then we grabbed perfect trend and exit, all of them on 1000. And when the market go into your direction, it's gonna stay. So the market did go to our direction, so we got extra $1,000 on that. We will cover the TI7 for NinjaTrader 8, and the precision automated trade, and then the signal entry from the market analyzer 1 minute. As you see, there is a trade on the Nasdaq, and we cover also, we have many scalpers. Some people getting confused. We have a lot of different scalpers. We have like maybe around 4 or 5 of them, and we have the scalper here as well on the Nasdaq. This is the scalper for the Nasdaq, belong to this market analyzer, the 15-second, and it is 127 ticks, 655, and it is a little bit chop market, guys. Be careful. It's a Friday, and the market is a little bit itchy here. It's a little bit fast, so relax, and we will approach everything. As you see from the 15-second, let's go ahead and we will cover the ES. The ES is not going anywhere. We will cover that. It's not gonna go any farther down than 42.6125, and we will explain why. But first, I want to cover, because we are in the trade on the Nasdaq. The Nasdaq, if you take the Nasdaq from the market analyzer, 1 minute is on the blue chart, took a drop, broke this double support. The double support become double resistance, and as you see from both of the trades, is any problem with the sound? Does anyone have a problem with the sound? Anyway, I don't know if you are talking about the sound for the indicator bin, or you're talking about the sound on the YouTube. Oh, okay. The sound is real slow. Okay. How is the sound right now? Is it better? You know, the yesterday. Uh, okay, I see that. Okay. Yesterday we had some technical problem. I hope the sound is better right now. Yesterday we had a technical problem. We couldn't go live because they have updated the software and for the live market for when we go live on a YouTube. And we had some technical problem, so they have upgraded to newer version, and that's why we couldn't come in yesterday. But thank you guys. I hope the sound is better now. Ben, is the sound better? Okay, let's cover the auto trade. Good, thank you guys. Hey, Lo, how are you? Let's go ahead. And this is the first trade on the 10-second today. And for the NASDAQ, before we jump on the ES, for the NASDAQ, there is no long trade, guys. If you are auto trading, manual trading, whatever you're doing, there is no long trade. This is a heavy resistance here, and there is only short trade on the NASDAQ. However, this is what I'm trying to say, and what I have said before. When you start your market analyzer in the morning, before you auto trade, before you optimizing is not holy grail. It's not going to predict on a Friday it's going to be mixed market, and it is a very mixed market because the NASDAQ is a very heavy to the short. It's only pullback and short positions on the NASDAQ, period. Here's my situation with the ES. The ES, you cannot take a trade, long trade, until we are at the 442.67.25. You can go long trade. And the reason is, let me explain to you. When the signal plot, it was a very heavy support area. And this is something you need to pay attention to. We don't need to be professional traders, getting training for 20 years. But if we are looking at this area here at the ES, this is not a pleasant place to trade. It is very, if you look at the fib line and the support, the ES is in a big pile of mud. You know, it cannot find direction, and there is a lot of resistance, and there is a heavy support. It is a typical behave on the ES right now. However, if we look at the even the YM now start getting difficulties here on the YM, because there is a lot of resistance, and we need the support on the YM from the ES. So once the ES, if you, well, we're not your financial advisor, so whatever you do, please, you are on your own. So we're gonna see more beef or more ticks on the YM once this ES crossed the 42.67. And the reason is, this one here, once the ES crossed the 42.67, is going to give us a boost for our trade YM, because the YM got stuck at 34.306 right there. So as we see here, when we are auto trading in ES, which I'm using 10 seconds, we always use 10 seconds in this room. As you see, the auto trade has nothing to do with the market situation at the moment. And what I'm saying is, on this one here, we can see this ES is struggling to break. As you noticed, this is, once you start learning how to read the chart, I don't want you to do your live trading. I'm going to break even this one here. I did it manually, and I need to explain why. For the guys who are just auto trading, you don't have to do it manually. But it will be very smart to start learning when you see something wrong, to cover your profit or your losses. You know, we cannot totally brain dead in the living market here and ignoring when we're talking about money, when we see danger. The danger right now on this ES, we need to see this now things has changed. It becomes support, but before we had a heavy resistance there, and when you see the market is struggling, what you do on the auto trade, you just break even on it. So at least, if this market turn around fast, we're not going to lose money on it. And this is very important. Sometimes we are forced to do that. Now, this is the question, is sometimes people, they don't, when they are auto trading, they don't like to touch a chart. I respect that. I totally respect that. But anyone can break even in case something did go wrong. Like now, as we see, the ES is struggling above this number we told you about, and now we need to make sure that in case if there is a fast turning around, we're not going to be affected by turning around fast and lose a trade. So by breaking even, by overriding the auto trade and a break even, it will be very smart, like what happened right now. And then we broke even on that trade. I prefer to break even or close position on the top of the bottom, so we will not lose that trade. We cover it. So if the market is a little bit, when you're auto trade taking a trade and it's not going to your direction immediately, the longer it stays, the more dangerous you are. So we don't want it to be going a plus and minus on a trade, because the longer it stays on that trade, most likely this market is going to change on you. So to avoid a risky trade, I strongly recommend to break even your auto trade. When you see a profit, you can close the trade. You can close the trade, or and take a 300, 400, whatever, or if you want to, you just break even and leave it alone. So this is two options we can do. Especially on a Friday. I don't like Friday. I don't like to take a lot of risk on Friday. I like to enjoy my weekends on a Friday. So we will wait till this market and again, as you see right now, guys, we have the ES on the market analyzer buy, the Nasdaq is sell, and the YM is buy. And if you notice, we've been covering that a lot. This is one of the things we can do before we start auto trading. We want to make sure the ES on the market analyzer, Nasdaq, YM, they are in sequence and they are going in one direction. When you start your auto trade in the morning and you see the ES to the positive, Nasdaq to negative, or YM to positive or negative, and on top of that, the 30-year Treasury bond is going in the same direction as an ES, that indicate there is volatility. That indicate the market is not in sequence and there is a potential to start losing money. Has nothing to do to be in a trading room for many years to learn and pay money every month. But this, you have to look at it, the basic. I'm not talking about sitting in a trading room, learn how to trade, alpha waves and all this. No. But you should not, and this is the question is, like a traders, what time you think, Sam, tomorrow I need to start my auto trade? And I say, look at the market analyzer. It could be 9 o'clock, the market is in sequence, could be 9:15, could be 9:30. When the market is not in sequence, like what you see right now, 90% when you are auto trading, you're gonna fail. Why? Because if you are activating an ES, sometimes the ES is gonna give into the Nasdaq, or sometimes the Nasdaq is gonna give into the ES. It depends where is the most important level. As an example, when we have this ES have a very heavy resistance at those level here between 42.70 and 42.69, the Nasdaq is not going to go long until this ES confirmed that. Plus, if we look on the Nasdaq, this is a re-entry point for the Nasdaq right now. It's right here. 14,353 is right there. This is a re-entry point for the Nasdaq to go short. So what we have right now, the Nasdaq is on the short position. The ES finally he has broke those area we told you about, but it's not gonna go for that long because there is a heavy resistance here. So then the ES is in a very choppy movement here. A chop movement for the auto trade is not good, you know. It's like you have a fancy car, whether it's a low Mercedes or a low Ferrari. You don't want to climb mountains with it. What you need to do, you need to have a Jeep four-wheel drive to start going to mountains with it, because those cars are very low. So what I'm saying is, this is here. It is very, very critical area, and that's why I start covering the lower time frame, because of the volatility here. And then what I will do, I will break even manually on the 10-second, like what I have done right now. The first trade, I immediately broke even, plus one take, so it's not costing me any money. And now I'm auto trading the 10-second. And the reason I'm auto trading the 10-second, because I know this ES is not gonna go over 42.69. The auto trade has cashed that trade for me and is going. This one here is 42.70, and I know that auto trade is not gonna go over the 42.70. I know that because I can see that. However, if those players decide to go further up with it and they're gonna break those walls, I still have a trade and I still have a trailing stop. I can secure more profit on that trade. I will let the auto trade take the best entry, and I want to keep my eye on it, because if this auto trade is not going directly to my target, then I want to refuge with break even manually. At least I will not have losing money on it, and I'll let it be. If I'm not trained enough to look if this ES is gonna break this area or not, that's fine. But at least I cover myself and protect myself, and I don't want to see red P&L on that auto trade. So the idea is, do I have to move the stop loss? Because this is not some auto traders like to do. You don't have to, but in some times like today, in some conditions like today, I prefer not to get in trouble and it just break even. If you are working in an office, your wife making you do the dishes or making you cook, you don't have time, you can come in and keep your eye on your computer, not overfilled or anything. And then what you can do, you can go ahead and break even and go back to whatever business you are doing, whether you are washing your car, or you are working in an office, or you want to give a hand to your wife. So this is, once you do that, you are free to go anywhere. You don't have to be behind the screen. As we see here on the ES, it's not going to be a happy picture above the 42.69. So this is the limitation. Another option, if you don't want to get your head mixed up on the weekend, you can close the button on 250 and let it run for another ride if you want to. So those small things here, looking at the market analyzer in the morning, wait 15-20 minutes till it gets in sequence, then auto trading. You cut off your risk by 50%. By just looking at the market analyzer, the 1 minute market analyzer, wait till the ES, NASDAQ, Dow Jones, they are in one direction, whether positive or negative is irrelevant. Also, I prefer the 30-year Treasury bond to be the opposite direction of the ES, because the 30-year Treasury bond should not go in the same direction as an ES. Should go the opposite direction. Those two, ES and 30-year Treasury bond, they give each other a signal. And before with the, by the way, do you remember we told you about this is the re-entry point for the NASDAQ? Here it is. This is the re-entry, and there is no long trade on the NASDAQ here. This is about the ES and 30-year Treasury bond. Back then, it was no internet. And for guys with the big capitals in Geneva, they used to sit down with us. They get an office and a computer, not an office. They can get a desk with us, and they sit with us. before the orders that were filled over the telephone, and then we have to clock it like when you go to work and you use to clock, and then what you do, you fax the order to the guy. And back then it was no Emini, it was the real ES, the big ES. And it's funny, we had one guy, originally a German, nice guy. He was sitting next to me, and back then Ninja Trader did not even exist. We were using the e-signal and a satellite and some other software belonged to the institutionals. And when a guy has a big capitals, they can come in and trade themselves, you know. And that guy was trading the ES and the 30-year Treasury bond straight from the dome, no indicators, straight from the dome. He had put 2 dome, and then what he does, he monitored the ES from the 30-year Treasury bond and the 30-year Treasury bond to the ES. He only trade ES in conjunction with the 30-year Treasury bond. The reason is, folks, there is a lot of things people don't know how to fill you up with all this information. The reason is when you put a chart on an ES and you put the chart for 30-year Treasury bond, they don't work together, they work the opposite direction. But the 30-year Treasury bond can sometimes signal for the ES and the ES signal for the 30-year Treasury bond. Let me pull a chart for you on the 30-year Treasury bond because it is very important. And what freaks me out about this guy, he was a healthy, wealthy guy, and his hobbies was, that's what really everything it was. When you meet somebody is different, you always stays in your head. And guess what his hobby? I mean, people, they buy yachts for hobby. We have one client now, he's buying $1 million yacht in Holland. We have another guy buying a villa in Ibiza. I mean, those are not normal hobby. But this guy's hobby was buying shops, Dunkin' Donuts, and in USA. And I mean, what a hobby. Whatever it was, donut shop for sale or franchised, he was jumping on the airplane, flying to the state to buy it. That was his hobby. And I feel sorry for his wife. But, I mean, if I have his money, I would get a different hobby. He was very wealthy, and yeah. So let me try to get you a 30-year Treasury bond and try to show you how important those two together. Oh, by the way, let me show you now. Let me go back. In our trading life, we have met very unique people, because I think traders are unique. Not those guys, those kids that come in yesterday, but those older guys, they are all unique. All of them are unique people, different people. And let's go back here. As we see here on that trade, before we cover the 30-year Treasury bond, as we see on that trade here, you have $400. You have an option, close, emergency, close. You can use this button And if you have not, you can close, but this one will not deactivate your auto trade, but you can secure your profit. Now, I want you to start having your eyes trained when you are. We know on this ES, the resistance is right there, and most likely we're not going to go any farther than that. And now we are climbing to target one, which I said we're going to hit the target one. We did. And now we have 3 trades in our hands. They are extremely high. They are all the way up there. Now here is the cat in the mouth. Now the automatic trailing stops start kicking in. My things is I don't want the trailing stop to be very close to the market movement. This is very important because you need to give a gap for this market to go back and forth. Otherwise, you're going to be stopped out and you're not going to get a nice big trades. You're going to stay lower trader with a couple $100 a day. If you do not keep the trailing stop away from the market movement. Some people think it's very smart to use the trailing stop 10 ticks so this way he can secure more money. It's the opposite, because when he's doing this, he's not able to start catching big trades like this one. He's gonna be a low trader with a couple $100 trading average. He's not gonna able to drag a couple $1,000 on one trade. So it's not smart to tight up your trailing stop. You have to give it room for the trade. On this one, it's very tight actually. It's very tight. But in order for you to get $1,000 trade, if the market is trending, you're not gonna get $1,000 trade on Monday morning. You know, on Monday morning is a scalping. On Sunday evening, there is no swing trading on Sunday evening. You should not be trading. Now here, before we go to the 30-year Treasury bond chart, here is the cat and mouth between this auto trade, which we have predicted, if you go back to this video, and we knew we're gonna get the first trade. We knew that. We claimed it before even it happened, because we can see the resistance is at 42.70 here, 70. Now, it is up to those guys you are renting DES from. Those the guys have an inventory because you don't have inventory. Those the guys, they move the market. If they are able to break all this, we are for it. The auto trade is going to do it. If they are not able to break that thick wall here, your auto trade has nothing to do with your performance, has nothing to do with your optimization. Your auto trade is going to go back and sink and stop you out here. Because this is something traders, they are so much you looking at the PNL on an auto trade, and they are dismissing the market condition, because there is no one comes at night and try to show why and how. Everybody want to say, okay, this chart made 1,000, this chart made 500, and then they run because they're trying to avoid complicity, and they don't want to be upfront because they don't know how to trade. They are marketers trying to sell auto trade. They cannot come in at daytime and show what they are really are as a traders. They cannot, because they are not the traders. They are marketers. So our job during the daytime to try to explain to this guy that trade here is not PNL. that trade here, it is based on the resistance, whether you are a manual trader or an auto trader. Because some people had, and when we talk to people, we get the feedback, why my auto trade took the first trade and come back? Why didn't he go to the target 1 and 2? And I say, because you have a heavy resistance here. Yeah, but I'm auto trading. Yeah, but it does not matter if you are auto trading or a manual trading. When there is a bumper, when there is a resistance, it applies to the trader is trading manually and is going to apply to a guy is auto trading. Not because you are auto trading does mean your auto trade is not going to stop at resistance. Just because you are auto trading does not mean your auto trade is going to be projected from the 42.66. You cannot change the fact. At the same time, you have no influence on the market. You cannot move the market because you have a couple $1,000s in there. You have to have a much more than a couple $1,000s in order for you to move the market. So as we see here, the optimization on an auto trade is irrelevant in this situation here. 1 minute you had $500 and now you have $180, and most likely if those guys not able to break this area, that trade is not going to make no more than $500. Depends on the break even with the trailing stop. However, if it was not this resistant area here, if it was not, then you have a possibility to go all the way up to the second chart, to the second target. So things is we need to separate the auto trade from what we wanted to do today, or our target, or the P&L. The P&L is irrelevant. This is the last things you need to look at. One day you're going to make $200 on the trade. One day you're going to make $1,700 like what you've done on the NASDAQ. And one day you're going to walk away. Welcome to trading. You cannot change that. I don't know what tomorrow it is, or Monday is going to be. No matter how much you're going to optimize, I don't know what is going to happen on Monday until I open the chart on Monday, look at the market analyzer, and then decide how this market movement and how I'm going to auto trade this market. We're not asking you to sit down and learn how to trade for 10 years and pay someone in the trader room. But what happened on that trade here, we knew what happened before. If you go back to this video, we knew exactly what we are expecting from that trade, and it come right on the spot what we were expecting. If you go back to this video, I told you we're gonna go ahead and take a first trade, and we're gonna break even with the first one. And guess what? This one here is a trouble trade. Why is it trouble trade? If you look here, there is a double support, and that is no go for that trade. And this trade is gonna put up a big fight, because this is a double. Every time you see double support, double resistance, you are in trouble if you are auto trading. Now on this situation, the market, it might gonna go to here, 42.66. In that situation, when I see trade like this, I want to cover it as soon as possible. I want to cover it as soon as possible, and I want to exit it out of minimum, because this one here, it might go all the way to the 42.66, there is a double support, and as you see, this trade is already in trouble. You see, it did not take off right away. And when you see a trade is not going right away to your direction, that means there is trouble. And when anytime you're taking a trade, and when the trade does not go away from your entry, go far away from your entry, that means that trade is in trouble. Because this is not the way we need to auto trade. We need to enter the market, and we need to see this market go away from our entry. So as we see here, this trade is coming, and it's not going to be a happy trade. So what I'm going to do, I'm going to break even on it. Why? Because there is a double support here. So now what I have done, I have broke even. Now I can relax. I'm not going to lose a couple of $300 because I'm too lazy to break even. I'm not going to do that. So now I'm relaxed. Now when it is either a +1 tick, or it's going to cost me at my dealer $5 commission, he can shove this 5. I don't care about the $5. But now I'm safe. This trading, you need to run and protect yourself immediately in any kind of trading. As I told you, I'm helping this firm with their large capital. Last time their capital is $13 million. I don't have any access to any direct trades to them. What I do, I help analyzing, I help consulting, and I have a group, and then they decide to go this way or that way. So when there is people can predict what's going on a few minutes ahead of time, this is worth money. So now, as we see, the auto trade took a trade, and now is going back for it. And what is going to happen here is going to come to this area here again, and is going probably going to have one more problem. The auto trade is consistent on taking a short, and he took another short, and immediately I broke even because this double support area here is staying losing a couple $100 on that trade. And I'm saving myself, and it is even. Why? Because of this double support. You know, guys, $200 a day, $50,000 a year. So you cannot sit down and say, well, it's only 200 and I will catch up on the next trade. Why I need to use my head? Well, we all have to use our head. And look, it's insistent on wanting to take short, and I'm not going to accept taking a short in here. And it's going to try and try and try. And then what you can do, you can pause this auto trade and then take the trade. Let me show you, when you are putting the two charts against each other, this is the 30-year Treasury bond, and I keep talking to you about it. And I keep telling you the ES has to be the opposite direction of the 30-year Treasury bond. And as we see here, this is the Treasury bond. The Treasury bond is supposed to hit his target at 159.05. And now the Treasury bond is going to go up again to the 159.13. Look at this. It's going to force the ES to go down a bit. When this one goes up, this one goes down. When this one goes down, this one goes up. So do not under, and I have a couple guys, they trade only bonds, future, the 30-year Treasury bond. One of them 5-6 years ago come in, and he impresses me. He said, Sam, I swear, this is the way he put it, because you are used to those guys, they just daydreaming. He said, Sam, I love my wife so much. She works hard, and I wanted to learn it. I wanted to learn, and I want her to stop working. This is his first conversation. And then the guy purchased, and he stayed 6 months training, 6 months. Then the guy disappeared. Then we had an update. He called me if he can get the update. I said, how are you? And he said, Sam, I didn't like the ES. I didn't like the NASDAQ. I didn't like the CL. But I find out the 30-year Treasury bond is very consistent with movement. And it is true, the 30-year Treasury bond is very consistent with movement, and it does not have a lot of enchilada like here. The 30-year Treasury bond is an easier chart to trade. The reason is it's slower, is a very stable with the trend, and it's not noisy as much as the ES, because the ES has become mainly institutional and auto trading. From a guy who have $500 to another guy who have $5 million. And it's a noisy little one. On the 30-year Treasury bond is a slower and a very, I want to say, is a very predictable movement on the bonds. This is not for a guy who want to auto trade the bonds. The bonds are for a guy want to be consistent with technical. You can auto trade it, of course. We have on the TI-7, we have the entry scalper B, is especially for bonds. That's why the TI-7, as I said, have 10 different entries and 10 different filters. And those entries is not just to collect numbers. On the TI-7, the reason there is 10 different entries to approach any given market. So for the bonds, and this guy, I said, how you are doing with the bonds? He said, Sam, my daily target is 850. Sometimes I walk away with 500. I've been consistent, and my wife stopped working, and even they moved to new home, and he was very well educated, and he don't talk a lot, like Vito from England, but the guy, he was a success story. But he, from the day one, he was consistent to sit down and learn, and he was not hanging on my neck. He said he want to learn, he want to develop his own, and he did. And that's why we say you should not copy anybody's trade. You should be trained what to look for, and you should develop your own skill, because you don't want to depend on a guy who wrote a book 20 years ago. It's all going to be forgotten when you are trading. So if we look on this 10 second, this time the 10 second is going through, but as you see on that trade on the ES, it's not over. And I'm breaking it even. Why? This is the third time I'm breaking even that trade because of this double support area. And if we look the first time, if you go back with this video, we knew where is the problem on that auto trade, not the auto trade, No. We knew the problem because there is a double support area here and it's not letting the ES go through. Now I'm putting this chart for you, and you can see the 30-year Treasury bond, how they work on the opposite direction. So if you really wanted to be a little bit more advanced trader, it does not hurt, and if you have a couple more screens, it does not hurt to put the bonds chart and there for your information. You don't need to trade it. But look, if we let me show you on the bigger picture on the 1 minute. If you look at the bond, you can see it's been non-stop one direction short. Look. You see, there is only one direction on the bonds. It's down. If we look at the ES chart today, it was long, chip chop, and then a long. You can see how the market can be going from short to long, from short to long again, short and long again, where if you look at the bigger picture on the 30-year Treasury bond, because most of the amateur traders, they are auto trading on the ES, and if you notice on the 30-year Treasury bond, normally amateur traders are not here. Only older guys, big guys, and you can see how easy to read the bonds and how it is going straight to the target, to the 159.02, because this chart has less noises, and the bonds is like a tank in the market, where the ES is just a little small flights, it's just going left and right, so you don't see amateur trader trading bonds, and most of the amateur traders, they are trading ES. Only those older guys, wise guys, they look at the bonds, they know what they're doing, they trade the bonds. And as you see, it's a very much readable and very much the bonds stay in one direction. Where the ES, you gotta fasten your seatbelt. 1 minute is long, 1 minute is short, because of this noises in the market. Has too many noises, too many amateur traders with an auto trade trying to get rich. So on the ES right now, if we are able to break this double support area, the next problem we have, it will be 42.63. So if we are able, if we notice this ES, it's been going back and forth like a tango dance, back and forth on the double support area here. Every time you see double support area, you have a problem. Every time you see a double resistance area, you have a problem when you are auto traded. So you cannot avoid double support or double resistance. However, if we are able to break this, that trade is going to turn from $300 to $1,000. If this market not able to break this double support area, this market is going to go back and knock you out of that trade nice, clean, and dry. It's all depend on that. And that, folks, please don't brush me off with this, whether you are my member or not. And because I heard a guy, we have one guy, he came from a different culture where he originally come from. People do not trade. They watch football. And I couldn't get that guy to understand the difference between just trading and look at the indicators at the same time. He still believes when he is auto trading, should not his auto trade get affected by support, resistance, and fib line. And he kept stubborn being about this, and he never got anywhere. So what I'm trying to say, guys, there is no auto trade out there. Trust me on this. When the ES came into the support area here on a double support, there is no auto trade is going to give you clean access, and it's going to go further down if the market is not going to go down. So by changing auto trades, it's not going to change the fact, or changing the time frame, or changing the optimization. It's not going to change the fact the ES was having a problem at 42.65.75. It's not. So now, as we see, we broke that area. Now we have a good potential to go all the way down to the 42.63. Very simple. This means we are switching our trade from a $300 profit. Now there is a potential to get the $1,000 profit. And if you are happy with the 500 and it's a Friday and you don't want to get headaches, close position, walk away with 500, and you are the smartest guy. So if you want to stay in this one here, now it's coming to the small floor and fibs, but the direction is down all the way to the 42.63. It might go back to reconfirm those double resistance, but it's going down again. So there is nothing to be scared of, but now we understand our trade have been upgraded from $300 to $1,000. I'm not asking you to learn how to trade. I'm not asking you to sit in a room collecting monthly fee from you. What I'm asking you to understand where you are in the market when you are auto trading. Let's take another example here on the CL. I'm gonna bring an auto trade for the CL so you don't think we just cover. It's irrelevant what time frame you are using as long as the technical chart is on 1 minute. So if you are auto trading Renko bar range tick chart, as long as you are looking at the technical indicators based on 1 minute, if you are more professional, you put 1 minute, 3 minutes, and 5 minutes. But 1 minute is enough for me because the 1 minute is calculating the high time frame. So for me, it is enough. So now as we see, guys, if we look at the CL, I'm going to cover 2 auto trades. If we look at the CL, I can see we have a nice, good clearance all the way at the moment to 74.10. Once this market gonna come into the first target, this is an institutional number, it's gonna pull back because this is a profit taken and the target 2 is all the way up there. So this auto trade is doing fine. What we will be doing, we're gonna be breaking even and if we are auto trading, we can bring it back all the way to 7410. There we go. Here is 7410, and this is where the CL is gonna have a problem right there. I already fixed it. We already broke even. We secured some of the profit. We secured some of the profit if this market going back, and we secured the target to the max. And now our job is done with this. Now let's go back to the ES. Now the ES is gonna come and face this problem right there. We're gonna face the 42.63 and the 42.62. What we are doing, the auto trade is saying the second target 42.62. I will buy that because the ES, once it's gonna go down here, is gonna get stuck again in here. The same way, if you look here, how the ES got stuck in here, the ES is gonna get stuck again in here. It could be rejected, or it can go farther to the final destination today, before 12 o'clock, to the final destination of today. Could be 42.61 or 42.58. This is the final destination before 12 o'clock. So now if we look at the CL, we did our job. The auto trade has a broke even, secure some of the profit. Don't look at it anymore. There is problem at 74.10. I put the target at 74.10. My job is done. As an auto trader, we don't need to sit down and study price action. But our job is done for this one. We have maintained, we have supervised on that one, and we are done. Now we can go to the other chart. The thing is, when you are, which we see 90%, when you go in, log in to give support, you will see the guy is auto trading 20 different charts. That tells you he's not chasing any chart. He have 20 charts open and he's just looking at PNL. He's just wasting his time and his brain and his energy. Because when you are auto trading, you just a second, guys. Okay. When we are auto trading here, we know we are coming to this area here. We're gonna have a problem in here. If there is the sellers want to push it farther down, it's gonna go to the 40, maybe it's gonna go to 42.61 and 42.60.25. So what we do now, we are approaching our decision time either we're gonna walk away with $600-700, or if we want to, we can go ahead and move the trailing stop. Now we secure half of the pile, and then we secure some of it. It's gonna go down. We secure some of it. If this market coming back is coming to the 42.65 and going back down again. Now we are building heavy resistance at 42.65. There is no more long trade. This is a heavy resistance and it's gonna go down, and now we are start getting tied to the support at 42.63 and 42.62. Okay, the auto trade closed. 637 on that trade. Look at this. On the NASDAQ, a heavy support. Heavy support. What is going to happen to the NASDAQ right now? The destination on that NASDAQ is only to here, 14,351. This is not a big trade. It's going to be projecting from here. So this is not a big trade. If this NASDAQ broke this projection at 33, that's mean we are going all the way down to target 1, institutional number. Final for today on the institutional number, it will be the final destination for today. It will be 14,297. That will be the final destination for the NASDAQ from now to 12 o'clock, and then there is nothing left to trade. This one here. So it is very important to, maybe at the beginning you find it too much. Maybe at the beginning you might find it too much. But if you just keep your eye on the fib line, you know, that's all what we are asking you, to keep your eye on the fib line. And once your auto trade approach a fib line, whether you are auto trading on 10 seconds or you are auto trading on 1 minute or 5 minutes, keep your eye open. Let me show you. This is the re-entry. This is the re-entry ES, and we told you here is the ES is not gonna go anywhere above that area, and it did not. But now, as you see here, start getting tight between the ES. This is a heavy support area, and this is a heavy resistance area. So this one here, this ES right now, is gonna drive you crazy. But if you are a good scalper, this is the best place to scalp. Sell, close, sell, close. And now, as you see, the NASDAQ is going back and forth. This is the projection. This is the resistance. This is the support. This is the resistance. There is no long trade on neither one of them. On the NASDAQ, there is no long trade. On the ES, there is no long trade. If we look at this ES, there is a lot of resistance. If we look at the NASDAQ, there is a lot of resistance. So determine this market It's not a long trade, it's a short trade. Immediately. It's going to require a lot of buyers and the good news and all kind of stuff to break all those walls. At the moment, if we look at the NASDAQ, there is nothing, even if those guys that want to move this market, there is nothing for that NASDAQ to go long. Nothing. It's locked to the downside. If we look at this NASDAQ chart, it's 1 minute. That's why the 1 minute do not lie. That's why the 1 minute can give you precisely what's going on in the market. Heavy support, re-entry, and look at this area here. It's a very nasty area to go long. This is a re-entry short from 1435. This is a re-entry short. So you can see how it is, the market, and how this market is now start getting, you know, it's like when you have an engine that start making noises, you know. Things is not smooth in the market right now. To translate that, if we look at the market analyzer, is mixed. When you ignore the mixed market, on when the market dive into chop, this is where 90% of your losing money coming from those situations where you have ignored chop market. When you ignore the chop market, you are in trouble. Your auto trade in trouble. Your account is in trouble. And if you can see it, that is a disaster. Because if you are just relying on auto trade to do all the mystery thinking for you, you're gonna end up buying a lot of auto trades, and none of them gonna avoid that for you. You know, so why wasting a lot of money? First of all, get yourself not just an auto trade with an ATR and a MACD. Get something where you can maintain it, update it constantly. Get behind the auto trade, how to learn to read the market, because by buying an auto trade, and I give you a couple recorded video how to optimize, you're not going to be touching the surface of the market. So auto traders are good, as we see here, like what we have done on the CL. We knew where is the problem, 74 and 74.10, and we have it at 74.10. Our job is done. This is our job, is to maintain, control, manage the auto trade, and let the auto trade take the entry and let it exit. Let it do its job, and you just supervise the auto trade. By not able to supervise, you manage the auto trade, and you're leaving it all to the auto trade, your chances are slim. Honest to God, you know, your chances are slim. Still, people they want to reject that, you know, but they will lose money, you know. And now the ES direction start changing, but there is no trade, and we still have this market analyzer not in sequence, and this is the entry point on the NASDAQ. It's not going to change the fact. There is a heavy resistance here. The NASDAQ is going to have a hell of a time breaking that area. which is going to cause impact on the ES as well. Because those two work together, whether we like it or not, they work together. And as we see right now, look at this NASDAQ. It's stopped right at our re-entry point right there. And the ES is just, it's like you're going up the hill and he's just running out of his steam and then exhausting, trend exhausting, 42.67, barely able to climb to the 42.67. There is weakness. And you cannot avoid to see this weakness here on that trade. So cases like this, you need to push your handbrake, stop, wait a few minutes till it's in the clear. I cannot, you will not be able to optimize an auto trade, can predict Monday for you if it's going to be sideways or trending. Cannot. And look now, to get it worse, now we got the double support area here on the NASDAQ and a double resistance here. No matter what you do on the NASDAQ, manual trading, auto trading, scalping, swing trading, you are in trouble with the NASDAQ immediately. Look at this. Very tight. No matter, can you imagine how many thousands of traders right now getting in a position on the NASDAQ, auto trading NASDAQ, and they don't understand there is sharks under their feet. How many of them today? And aware the problem in the NASDAQ right now. How many people? In thousands. In thousands. And aware where they are on the NASDAQ. If we look at this NASDAQ right now, heavy support, heavy resistance. Here is your heavy resistance. Here is your heavy support. Even if it's able to break this support area, it's going to go down here and get stuck. For a resistance, look at this. This one here, you can go back and forth all day long. Nothing is going to happen on that chart to give you money. Whether you are a manual trader, auto trader, professional trader, or an amateur trader, nothing in this area gonna bring you money. This is what we told you on the video before it happened. This is our re-entry point. This re-entry point was good to go from here to here. When we have this now support, a new support area is no longer valid to even touch this NASDAQ. Because I don't know now if the support gonna hold or the support on this area is gonna hold. So this one here, you cannot touch it anymore. It's not tradable. This area here, you gotta wait 10-15 minutes before you can trade it. And most of those guys, they've been around for many years. They know. They pull back or they stop the auto trade. Maybe now they got old. They cannot do manual trade. That's fine. But when they are auto trading, they know to stop right now. They know that. It's not a new news to them. They've seen it a million times. So only those new guys, they cannot read it, sadly. But that's what our job, to explain how it is with auto trades, because this is where the debate is on, would auto trade work or they don't. Some people say it does, some people it don't, and none of them is true. Auto trading blindly is just a fast train. It's a matter of time before it gets wrecked. Manual is no longer valid, honestly, because the market got complicated and the algorithm got very advanced. You cannot just take an ATR and a MACD and whack the market with. But auto trading in conjunction with an educated man, don't have to be trader, but he has to learn how to read the market. If he don't know how to read the market, he cannot auto trade. He can buy as many as he wants in auto trades, but it does not mean those auto trades they're gonna bring him consistency if this auto trade not supported by education, by getting educated with it. Because auto trades by itself, when you are at the mercy of an auto trade, if the market is moving, you will make tons of money. But when the market, like now on the NASDAQ, is dangerous, this is dangerous here on the NASDAQ right now to trade. And on the dangerous areas here, it can take your money away. So there is two phases when you are auto trading. When the market is trending, it's a beautiful, gorgeous woman, you know, and it's like a beautiful. But when the market is not trending, it's like you are sitting with a witch, you know, can take you and bite you and take your money away. So the market has two faces, you know, and you don't want to be on the other side. So take your time. Learn. When you are auto trading, put your 1 minute chart, whatever indicators you have, whatever system you have. I respect that. Try stay away from the P&L auto trade and try to keep your eye on your technical chart. Because when you are looking at it a day in and a day out, you start developing, you start like this number 4267 is not stranger to us. That number has been with us all week. Now the numbers, they start talking to you. When you are looking at the technical chart, now you start understand where we are. This is, we took this one, the first one, and we took the second one, break even. Then we broke even on the third one. You can go back to the video. Then we took that trade, and now we are going to the fourth trade today. And this auto trade already made 800, and now we have 487. We already accomplished our target. Now on this one here, as we see, we're going back to the same problem, 42.69.75 and 42.70, and once we get there, I'm not expecting this auto trade to go any farther. So we know where we are going. The auto trade has already broke even with a trend and a stop. Once the auto trade break even, my mission is over. Now my mission is, should I exit? Should I extend the target? Should I take this one here a little bit farther, secure some of the target if you feel we are coming to dangerous area? Or if you want to leave it alone, like what we are doing right now here. We left this the CL alone. Our job is done with the CL, and we readjusted the target. The trailing stop is working to our favor, and now we don't need to look at the PNL, so the devil will not play with our head. Leave it as is. Whatever happened, our job is done on this one. On the ES 10 second, now we understand that it's 42.69, but you know what? The trailing stop has already kicked in and secured some of the profit. So if we don't want it to tangle with the 42.69, it's very fine. You're right to do that, because I already broke even. I don't care. Now we are on a free flight. We are on a free trade. Maybe I'm not smart enough to know if this market gonna break the 42.69.75 or not. I will learn one day if it's going to do that or not. But for me, as my job, when I am auto trading, once I broke even, I'm in the clear to leave that chart alone. And now we have secured some of this trade. The market is $400, but maybe I secured only $100. I don't care, as long as we are not in red. And we are leaving gap for the market to go back and forth. We did our job, and the rest is to the market, is no longer in our hand. So we don't need to look at the P&L. We need to look here to see where is our option. Two things for this ES is gonna happen. The first things, if this ES gonna drop, is gonna drop to the 42.66.25, no farther. If this market able to break that area here, we're going directly to the 69, and then we can make a decision at 69. That's why, guys, if you want to buy an auto trade, buy an auto trade. But if the education, the training does not come with the auto trade, you are wasting your time and your money. Because anyone can learn how to optimize, anyone can turn on an auto trade. But to build consistency is not just like what they told you, optimization. And optimization can identify your trailing stop, your stop loss, the time frame. But it's not going to predict for you on Monday morning, but it's going to happen. Can anyone tell me what is going to happen on Monday? Can anyone tell me at 9:30 on Monday the ES is going to trend or not? Can you tell me on Tuesday the ES going to cross 42.70 or not? No one knows. The only time you're going to find out when you open your Ninja Trader on Monday and Tuesday. Optimization has been a wrong message to the traders. Optimization is something to adjust an auto trade for it, but it does not mean we need to turn our brain off and now because we did the optimization, we did our job. No. You did the optimization, what you've done, you polish your tools. Now you have to learn how to use your tools. I remember from my hangar when we were working in Dallas, we have some guys, they come in with a top nut, snap-on tools, and they have the fanciest toolbox, and everything is a snap-on, and they don't know how to use it. So what is good if you are just bought the tools and you don't know how to use it? Mine was a rag, and it was greasy and everything, but I was working with it. I was not shining my tools all the time and not know how to use it. So mine was my toolbox was a big mess, actually, but I was using it. So here is by using the optimization does not mean you've done your job. You just polished your tools, and now you need to use your tools. That's it. Optimization is not just a crystal ball. It's going to look in the future for you. No, never. It's a wrong message, actually. And most of them, they don't want to even get into those areas because they will fail. They tell you, optimize and good luck. Don't call us, we call you. Here's a couple recorded video, have a nice life. And then on top of that, they give you a ranker bar. So now you are on a big delusion. Because on the ranker bar, you're going to get a huge profit factor. But in the reality, the ranker bar move and all of it is fake. And then you sit down day and night optimizing because you were told once you know how to optimize, you're going to have success. Optimization is just cleaning your tools, getting ready for work. That's it. So now as we talk on the ES, we got everything under control with the CL and an ES. And now after we cross this one, as we said, once we cross this one here, we're going to cross this one here. And then our problem is going to be 42.70. And now it is everyone start getting itchy, tired, and want to have lunch. So now we are against the clock. Always try to split your day. Please do not sit 8 hours behind the screen. 12 o'clock, walk away from the screen. When we are done on the YouTube, the minute we are done with the YouTube, 20, 30 people send us a message. This one have a question. This one, he needs help. This one. We don't respond. From 12 o'clock to 12:30, it is our lunch time, and nobody is going to bother us. We need to be away from the computers. So when you are trading, you need to be away from your computer at 12 o'clock, 12:15, 12:30, but you need to put 1 hour for your brain, your eyes to relax, and then you can come back on the last 2 hours of trading. But do not sit gluing up to the market day and night because it confuses you. Start making a wrong decision. You're looking at the market day and night, and that is confusing you. And now it's going up, now it's going down, now I'll take a trade. That it is going to drive you crazy. So you need to break away from your trading. The first, try to break it in 2 rounds. 8 o'clock, 9 o'clock, whatever your local time. Try to be done by 11 o'clock. If this auto trade made 375 by 11 o'clock, close it. Step away from it. If you are on a good trade, it might make $1,000 like the CL. Go away at 12 o'clock. You did your job. There is a trailing stop. You set your target. Leave it alone. You'll be back in half an hour, 1 hour. You're either stopped out on the trailing stop or on the target. Don't look at it. Leave it alone. So try to be always fresh and not to be disturbed by negatives. And when you are trading, don't listen to those rumors on the news television because they have beef in it, And don't let them confuse your mind because you are a technical trader. When you are auto trading, you are a technical trader. You're not fundamental trader. Stay technical. If this market gonna break the 4268, we're gonna go here. As simple as that. No matter what this guy say on the television about inflation, dollar, US, this is not your bread. Our bread is once we break this one here, once we get there, this is my problem. I don't care what this guy on the television telling me. He's not going to spook me away from buying or selling. Too much news, too much information can confuse you. Stay technical. Turn off your brain. Turn off your ears. Stay focused on your chart. When you see trade, take it. When you see focus on a target, take it. And don't let these noises or a guy next to you give you negative. Oh, man, no, man, close, man, take a trade, man. Don't let this guy disturb you. Kick him out, kick his butt out, Focus on what you believe. So now we are going and climbing from 525. Once we cross this one, we're going to come here. So our estimation for that trade is around $700-800. Then we can toggle that trade once we get to those level here, because once we see double resistance, this means the ES going to stop there. And it's going to give us time to decide if we want to close position or if we wanted to move on to the target one. After target one, the market is going to go back a bit because there's a profit taken. Those are institutional numbers. and target 2 is a way up, is right there at 20.4274. So this is our situation right now. We have the trailing stop is doing fine. This one here is doing fine, so we are okay. Our job is done. Now it is the auto trade take over for us. The same thing like when the pilot takes off. He do everything. He go through his checklist. He takes off. Once he take off, set the right direction, put it on an autopilot. His job is done, and now he is supervising. He's maintaining, the altitude, the direction. He's no longer, he becomes a supervisor to his instruments. When you are trading or auto trading, you're maintaining, you're breaking even, you've set your target, you understand what's going on, your job is done as a trader. Now it is the auto trade, the job, to continue doing the job for you. So what I'm going to do, I'm going to extend my time a little bit to see what will happen to this ES. Are we all able to climb to the 42.69, or we are going to collapse all the way to the 42.65? My estimation, if this market is going to go down again, it's going to go down to the projection area at 42.67 and go back up again. This is my prediction on it. If it's going to go down, it's not going to go farther than 42.67.75 or 50, which our trailing stop is right in line with the projection. If this market decides to go up, we will make a decision if we want to override the auto trade. And if we want to override the auto trade, we can override the auto trade, or we can leave it alone. But once we get to the 42.70, we'll make a decision. Guys, I'm going to take 5 minutes break. I'm really dried out, and then we will continue. So I will be turning off the microphone for a few minutes. Thank you. As we see, our CL trade is coming right to the target, and we're leaving it alone. The market is having a problem with that line, 42.68. It seems like it's gonna go for it. And then our destination, and look at the clock, 11:42. Our destination here, we're gonna climb to that. That will be around $600 more, hopefully, and then we are done for today. So we'll see what happens. Good. We're about to close the CL. And the ES might drop to the 42.67 and going back up again. This is right here is the re-entry, and we have the support at 42, so we are fine. We are okay with that trade. It's coming right here, right there. Let's see if this area gonna hold. It's 42.67. This is a re-entry on the ES. If there is any delay on the YouTube, is the delay a few seconds. It's not from us, guys. It's from the YouTube. Sometimes we have some delays. Nothing we can do. So if your chart does not match our numbers, it's not because it's just you are ahead of us. What you are seeing, I'm on the same pace as you are, but because of a YouTube, you might see couple bars or one bar, or you have 15-second. Maybe sometimes the YouTube, when we are broadcasting, there is 15-second delay. Sometimes can go up to 10 seconds, 30 seconds, drop to 10 seconds, because I can see it on my monitor here. Sometimes when we are steaming, there is sometimes can go down to 3 seconds delay. But the delay is not coming from us. The delay is coming from the YouTube broadcast. As we told you, the ES is going to drop to here, and it did. Look at the wig on this. I hope you can see the wig on the YouTube. And it came in and it dropped. It's going to be trying to climb again the 42.68, and we are about to close that trade on the CL. Our target is 74.10. We are a couple ticks away to close. We still need 10 ticks on the CL. You see, guys, what happened to the ES? Look. That's why I said I'm not scared from this pullback. When you see your bars start pulling back against you on an auto trade, look at your technical chart to make decision if you want to override the auto trade. But because we already broke even, we don't need to mess with it anymore. We leave it as is. Somebody asked about gold. Yes, we do have gold. This is a gold chart. We are 5 ticks away to close the CL, which we have set up the target on the CL long time ago. And here where we started, if we look at the CL, we see where we gonna have a problem right there. You see where it says heavy resistance? And if we look where we readjusted the target on the auto trade, and we are just a couple ticks away to close. And if we look at the CL, it is having a problem now at 7406 because this line came out now. On our time, it was the 410, and now it start building heavier resistance on the CL, and the resistance is now 7406. Before it was 7410. So we are at the end of that trade on the CL, and it can be closed right now as we speak because the CL is finished. Now to go back to the ES, we understood if the projection didn't hold, we're going to go all the way down and then go up again. And this is exactly what we are doing now. For the last half an hour, it has been having a problem with that line, 4268, for the last half an hour, as you see. So once we cross that bridge, we are climbing directly to this number, and this is what is the end of that trade, for that auto trade from now until you go to lunch. So there we go. We are about right on time at 12 o'clock. Now it is 7407. We are at the end of that trade. And now we are here. Once we cross this one here, the 4268, we are shooting directly here. So the problem is, for the last half an hour, this ES has nothing to do with your auto trade performance. The ES having a problem with 4268.25 to cross it. As we see on this chart, from 11:30, the ES from 11:30, and now it's 12 o'clock. For the last half an hour, the ES trying to climb that line and has fell. The longer he try, the more it's going to go against you. For half an hour, that ES was not able to close close above that line. Now on the CL, right at the clock, we hit the target. Now it is 747, 749, and now we are going to the closing position by the tick at the same clock at 12 o'clock. We nailed it to the perfect timing, perfect closing position. We are missing one tick to close that trade, and it is 12 o'clock. That's what we have estimated, and that's exactly we nailed it to the last tick. And now the CL, it is finished. There is nothing left on the CL. And now it is 2 ticks away. We are 2 ticks away, and it is 12 o'clock. Perfect. So the market is not controlling us. We are in control with our trades. We're not taken by our neck and let the market drag us to somewhere where we don't want to be. The market, we put our targets, we put our standard in there, we estimate our targets, we estimate where we are in this market, and we estimated where is going to be problem, and we nailed every single step. Now, I'm not expecting you to nail every single step, but once you break even on an auto trade, let it be. Keep the trailing stop away from the market movement. Give it room to go back and forth. As we see now on the CL auto trade, for the last 5 minutes, we're trying to close at 7-4-10. And right now, it's been playing between 07 and 08, sometimes 09. We did not just nail it to the tick, also to the hours. By 12 o'clock, we should have been done with the CL, and we are almost done with it. So we are in charge with the market movement. Not the market is in charge with us. This is very important. So I'm going to extend it a little bit to see what this ES is going to do. And look where is the CL right now. And we know why. We explain why. Because of this heavy resistance. And you can see where the CL stopped, right where we readjusted the target. That is an accuracy. When we can predict the market ahead of time, where most likely we're going to be estimating that trade, where is the destination for that trade. We cannot pinpoint every time, but we can pinpoint most of the time. That should be enough for us. With the ES trade, we know what's going on. For the last half an hour, it's been this problem with 4268.25. We know what it is. It's not the auto trade performance. It is the ES having a problem at 4268.25. We did our job. We broke even. We secured a profit. Nothing we can do anymore. We cannot grab anything more than what the market is willing to give us. So there we go. To the tick. And we're going to continue till we see what will happen with the ES. The ES wanted to break that area here. The 4268.25 is a problem. We need to break it. We need to close above it. CL, done. Estimated by 12 o'clock. Estimate the number. We closed it, and it's done. And it was not a hard work to do the CL. It was not a hard work. Broke even, let it be. So now we are done with the CL, and we don't need to look at CL charts anymore. And now we have the ES has to climb to the double resistance. So what I'm going to do, I'm not going to go away. I'm going to stay on the channel until we see the ES closing that position on the 10 seconds chart. Another thing is on the CL. Don't let it fool you. There is a lot of resistance here, and there is an institutional target here. This means once they go to the institutional profit taking, and the CL is going to drop very fast. So you did not miss anything on that trade. You did not. So that's your trade for today, and it is okay. Now we are waiting on the EIS to climb to the 42.69. So we stay on hold. Look what happened, guys. After we did the CL, we got the last take out of the CL, and we hit the target. We estimate the target an hour before, and look where is the CL and where we closed that trade. Beautiful. And now, as we see, as we expected, the CL is dropping, and now it is a profit taking, and it is finished. So we're still waiting on the ES, still struggling on the same number, has no influence here about the auto trade, is about this line. We need to cross this line to climb to the 42.6975. Here it is, 42.6950, one tick below. And this is where I'm aiming to my target. And we're gonna go ahead and move the trend stop to the 42.6650, right below the projection. And we're gonna leave it as is. Again, guys, you don't have to fuzzle with the auto trade, but our job to teach you how to be consistent in an auto trade. This is, if you want to leave it alone, leave it alone. Nothing, but to build consistency, sometimes we are forced to readjust the trailing stop or stop loss, or we are forced to adjust the target like what we have done right now. And this is a 10-second chart, and the market is not moving. So I know why. We know why, and that's life. That's trading. So we're gonna stay longer to get to this bottom of that one. Thank you. Okay, guys, everything is finished, and now it's 12:26, and we wish you a very nice weekend, and please be safe. And to our members, we will see you on the private webinar for members only on Monday morning. Thank you very much, and I wish you a very nice weekend. Bye for now.